What's up, guys? Todd here. So just ahead of the market open, just doing... Hate to turn down Paul Simon. Just doing some market work here before the open, and I want to talk about this idea of how many monitors do you need to be a trader, okay? And obviously it's fun to play with hardware and technology, like I get that. But I think it's a debate that, you know, we should talk about quickly. Do you need multiple monitors to trade a bunch of positions? Hell no, okay? Of my whole setup here, okay, I've got 4 monitors. My positions are all right here. Okay, that's it. The rest of it is dedicated to the charts. And I'm a very heavily chart-based guy. I love Elliott Wave. It gives you context. And that's the key, I think, that you guys need to get is context. The reason that I have multiple monitors is because you have to look at the market at multiple degrees of trend. This chart over here, and I'll take you into it in a second, those are my weekly and daily charts. Then I'm going to go into my intraday 195-minute chart. What's on my finger? Anyway, and then down to like a 120 or a 60-minute chart. So it starts big time frame going down to smaller time frame. And the idea here is I'm a big Elliott Wave guy, so as I look in the weekly, let me zoom in here. As I look inside of this, what I believe to be this orange 4 up on the weekly chart, I want to very quickly be able to glance over here to the daily chart. Okay, the daily chart within wave 4 is right there. And you're going to, according to the guidelines and rules of Elliott Wave, you're going to get more detail within that triangle and say, where's the upper resistance? Okay, up around there. So off of this daily chart, we're going down to the 195-minute chart to get even more detail up about where I see resistance to be. Same thing, 195 down to the 60-minute chart, which is right here. Okay, in this time frame here, I play around with. Depending on the volatility of the market, we go to a 20-minute, we can go to a 15-minute, go to a 30-minute. It doesn't matter. Okay, people ask me, like, what's the best time frame for a trade, for you to trade? 2 answers to that. Number 1, what's the purpose of you being in the market? How much risk do you want to take? Risk is a function of range and volatility, realized volatility on a chart. So some markets have very small volatility and small realized range. You should be trading a larger time frame. Some markets have very high implied volatility and realized range. Sorry, I should say historical volatility or realized range. You should be trading a shorter time frame. It all is relevant to your trading time frame, okay? So this chart here, I'm showing a 30-minute to look at this S&P to say there should be resistance up around 27.20. The idea is you can do it all on one monitor, but if you can just quickly glance across the monitors, you get context. You know where resistance is above, you know where support is below. Okay, that's how you truly understand a market. And that's why I love Elliott Wave so much, is because the pattern you're trying to see, I was looking at a triangle on the daily. It doesn't matter what time frame you're looking at. The upper resistance on the triangle is the same on all time frames. The lower support on the triangle is the same in all time frames. It's just the time frame you need to look at to get the specific detail and then set up the trades according to your risk plan, your risk tolerance, the vehicles you're trading. So, you know, do you have to spend a bunch of money to get a setup like this? No, man. I mean, you can get a laptop, okay? You can put in 2 cheap, 24-inch monitors, one via HDMI, one via DisplayPort, and you have a 3-monitor setup that accomplishes the same thing as this, okay? So just wanted to talk about that. I hope that helps, guys. Market's open. I'm going to go to work. See ya.